Hello everyone and welcome back to another video. Today we are going to be looking through another profitable trading strategy on the site tradingview.com. I want to clarify that I personally use this strategy myself quite frequently. I first came up with this strategy over a year ago and I use it for my Forex trades. This strategy consists of two free indicators and can be used on any product with high volume. This includes large cap stocks, commodities, indices, futures, Forex, and crypto. This can also be used on any time frame. But I personally like the 5-minute time frame for this strategy, so we will be using that as our example today. Okay, let's start with the setup. First, head over to indicators and type in Laguerre RSI. Now that is done, let's head over to indicators one more time and type in cumulative delta volume. I have used cumulative delta before in one of my previous videos, and I highly suggest you watch that video where the indicator is used in another effective trading strategy. So, what is the indicator telling us? The cumulative delta calculation is the buy orders against the sell orders. If the cumulative delta is positive, then we have more aggressive buyers. If it is negative, we have more aggressive sellers. This is one of my favorite trading indicators, but it cannot be used alone. Now that we have put our indicators on the chart, let's change some settings. First, head over to the Laguerre RSI settings and go to Style. Let's change the RSI Color 2 option to white. Once we have done that, let's change our first plot to green, and our second plot to red. Next, head into Inputs and change the alpha to 0.3. What is important to remember is that the alpha input will change, depending on what time frame you are on. If you are looking to trade this on a different time frame, check the description in this video for updated settings, specialized for your time frame. If I miss any time frames out in the description, leave a comment down below and I will reply to your message with the settings for you. Okay, now we have optimized the settings for the RSI, let's change the cumulative delta settings. Head over to Settings and go into Inputs. Let's uncheck the box labeled Heiken Ashi Candles, and let's also enable the SMA1 with a length of 50. The cumulative delta will adjust its sensitivity depending on your time frame, so these are all the settings we need to change. Okay, now we have set up our chart, let's run through some long examples. Our requirements for our long positions are as follows. First, we need the Laguerre RSI to be breaking out of the oversold 20 range displayed in green. Secondly, we need our cumulative delta candles to be green, and we must break above the SMA 50 level like so. If both requirements are met, then we are free to take a long position. We set our stop loss at the most recent swing low, and for this strategy, we are targeting a risk-to-reward ratio of 1 to 2. Let's run through another long example. As you can see here, our requirements are met again. The Laguerre RSI has broken out of the oversold 20 range displayed in green, and our cumulative delta candles are green and are above the 50 SMA. So we can enter here. We set our stop loss at the recent swing low, and we target a risk-to-reward ratio of 1 to 2. Let's run through one more long example and then we will head over to short positions. Just like before, our requirements have been met. The Laguerre RSI has broken out of the oversold 20 range in green. And our cumulative delta candles are colored in green, and are above the 50 SMA. Let's take a long position here. We set our stop loss at the recent swing low and we target a risk-to-reward ratio of 1 to 2. We get a bit of drawdown, but this was a huge profit. Now that we have run through the long positions, let's head on over to the shorts. Our requirements are as follows. First, we need the Laguerre RSI to be breaking out of the overbought 80 range colored in red. Secondly, we need the cumulative delta candles to be colored red, and below the 50 SMA. If both requirements are met, we can take a short. We set our stop loss at the most recent swing high, and we are targeting a risk-to-reward ratio of 1 to 2, just like the long positions. Let's do another short example. As you can see, the requirements for our shorts have been met here. It is before the long position we just looked at. Our Laguerre RSI has broken out of the overbought 80 range colored in red. And our cumulative delta candles are red and below the 50 SMA. So let's take a short position. We set our stop at the recent swing high and we target 1 to 2. Let's run through one more long example, and then we will run through what not to do with the strategy and the easy mistakes that can be made by traders when trading this. Once again, our requirements have been met. The Laguerre RSI has broken below the overbought 80 range in red. And our cumulative delta candles are also red, and are below the 50 SMA. So we can take a short here. We set our stop at the recent swing high, and we are targeting a risk-to-reward ratio of 1 to 2. Okay, let's now go over some of the things that traders should avoid when using this strategy. When using this in our real trades, we should aim to avoid entering trades when the RSI is overbought or oversold at entry. Doing this can lead to a reversal of the trend you are trading, and your stop loss can be hit very quickly. So stick to the requirements for the strategy at all times. One other important factor to our entries is that we enter on the close of the valid candle. We should never enter before the candle has closed. This is because the market price is still fluctuating during the open of the candle, so the chart can change its course before the candle closes. And finally, we should never take a long position when the RSI is above 50, and we should never take a short position when the RSI is below 50. We only ever enter a trade when the RSI has broken above the oversold 20 range, or broken below the overbought 80 range. Okay, now that we have run through some examples and what to avoid when using this strategy, let's backtest this and see if our results come profitable. I backtested this trading strategy 200 times, on the Forex pair Australian dollar to US dollar, 5-minute chart. I risked 2% per trade, starting on a $1,000 account. The risk-to-reward ratio was set at 1 to 2 for all my trades, and I only took trades that were valid with the strategy's requirements. So let's run through these numbers. Our end profit was a total of $25,273, giving us a gain on account of 2,527%. We got a win rate of 61.5%, which is good for the 5-minute time frame. And our best winning streak was a solid 9, against our losing streak of 3. Overall, the strategy backtest turned out to be an expected success. Remember to always do your own due diligence before taking this strategy into a live environment. But after a year of experience with this strategy, I highly recommend you do your own research and analysis on the strategy, as it may bring you good profits if used well. Don't forget to stay patient and manage your risk when trading. This is fundamental for your success in the trading world. Anyways, traders, I hope you have enjoyed the video, and stay tuned for more videos to come on other profitable trading strategies.